Let's break down what today's market action means for your money. Here's what it actually means for you. Look, I get it, you check your phone, see red everywhere, and your heart jumps. But here's what I've learned. One day of market action is noise until it tells you something real. A 2% drop could be profit taking, could be rotation out of one sector into another, or could be the start of something bigger. The key is you don't make decisions in hours, you make them in context. So let's decode what today actually means for your money. Every market move has 3 layers. First, what triggered it? Was it news, earnings, Fed minutes, or algorithm herding? Second, what's the direction? Is money fleeing stocks entirely or rotating between them? And third, how long does it stick? A morning spike and reversal by close is different from sustained selling. Today we had Fed comments, so the trigger is clear. Money rotated from megacap tech into value stocks. That's not panic, that's rebalancing. And rebalancing moves fade. Here's a framework I use. 80% of intraday moves fade by the next day. So if your stock is down 3% at 2 p.m., don't assume that's your new reality. By Friday, it might be up 1%. Volume is the tell. If big volume accompanied the move, it's more likely to stick. If it's low volume selling, it's tourists panicking. Earnings season makes moves bigger and stickier. So check what's the volume today. That tells you if today matters. Your portfolio's risk today depends on what you own. If you're 60% megacap tech and tech sold off 3%, you're down 8% just from the sector. If you're diversified across sectors, the same market move hurts less. That's concentration risk. Your bonds probably stayed flat. That's why bonds exist, to be the shock absorber. And here's the macro backdrop. VIX is under 20, which means underneath the surface. Most traders think this is temporary. Markets in real crises spike VIX above 30. We're not there. I watch breadth before I watch price. Did 70% of the market fall today, or just 30% of mega stocks? Broad sell-offs are scarier. They mean the whole system is repricing. Narrow sell-offs mean one group got expensive and rotated. We held the 200-day moving average support today, which is a good sign. And zoom out, the Fed decision in 2 weeks is bigger than today. That's the real catalyst. That's what shifts the whole regime. Here's what I think. Today is a rebalancing day, not a selling day. If you've been meaning to trim a winner that got too big, today's pullback is a gift. Sell into strength later this week. If you've been meaning to buy quality and waiting for dip, you just got one. Check your written plan. If nothing has changed about the company's earnings or your goals, nothing should change about your position. Emotion costs money. Patience makes money. That's the read. Keep it simple, react to the data, and join the free Discord at Discord. GG/R47RZGM.